I know you're all excited to finish out the day with new federal guidelines, right? Oh, I see scrunched faces out there. Okay. Well, fortunately, I'm not going to go over all of the guidelines. I did post the new uniform guidelines with my materials. Looks like this. I'm sure you all printed it out and read it and highlighted it, and no? I did see someone printed it. I seen it on the table. Hey, more than one person printed it. I was impressed. So what I did is, going through the uniform guidance, I thought about it from your perspective and tried to pull out the major points, the things that would affect the counties, the things that you want to know, the things that will help you to avoid federal findings so that you don't get written up. And as Tammy had mentioned before, we are going in and we're doing 14 and 15 audits, sometimes simultaneously, and those are two different guidelines. The new federal guidelines, they're going to start in 2015, so we'll be doing your 14 if it's federal under different guidelines than we will the 15. Most of the guidelines have moved over, but there are some new things to what we used to do. There's some things that aren't there anymore. So there is a learning process in that audit itself. The PowerPoint is going to include, I won't go over everything on every one of the PowerPoints, but a lot of it's just information about where you can find the guidelines, the old guidelines and the name of what those were versus the new guidelines. This section here tells you what each of the subparts of the uniform guidance, so if you're looking at something or looking for something, it'll tell you what part to go to. So, as I'd said, this is going to be effective for your 2015 audits. The other thing that's important, if you grant out money that is the county's money, this is also applicable to your subrecipients of the grants. It has the same effective date as it does for you, for them. And you need to communicate that to them as well. This slide here, it really just tells you if the old versus the new, and this really applies to, I included this slide, and we're not going to really go over too much of the allowable costs and cost principles, but it gives you a cross-reference from the old guidelines to the new guidelines, so I thought it would just be a nice reference point if you're looking for allowable costs and what those criteria are and where it used to be versus where it is now. One of the things, and you probably won't notice it as much as we do because we typically compile your federal schedule based on the information that you input into the gateway system. The information that you put in for the federal grants into the gateway, it's not going to change. It's just the format so that the reports we issue will include some additional information on that federal schedule. It's not that you'll do too much other than when we go out and we provide you with that compiled schedule, we ask for you to look it over and review it, and then we ask for you to approve it. So it may look different than you've seen in the past. You may also get two different ones, 14 versus 15, that may look a little bit different. We refer to it as the SEFA, or the Schedule of Federal Expenditures. One of the things that changed is we used to include notes before the schedule that included some information. Well, the new guidance wants that information actually on the face of the federal schedule rather than in a note. Includes the amounts provided to subrecipients. That's going to be the amounts that you pass to other units that you're granting out, part of your grant. Any loan or loan guarantee programs, you're probably not going to run into that too much at the county. I don't know, there's only a couple programs out there that it applies to, and the counties don't usually get those programs. And then non-cash awards, and we don't see a lot of this at the county level too. It would be things that you receive through a federal program that isn't actually cash. We mostly see this at schools when it comes to food subsidies, the commodities and that type of stuff. So that's not going to affect you either. The other thing, there is the 10% de minimis indirect cost. This probably won't apply to a lot of counties either. The only time that you can take that 10% de minimis is if you have not had an indirect cost rate before. So moving forward, if you're a county that has not adopted an indirect cost rate, then you could take, rather than calculating one, you could take the 10%. If you decide to do that, that would be something that we would ask when we come out to audit. It currently is not a question in Gateway. We may possibly add it in the future, but we haven't determined that yet, mostly because it's probably not going to apply to too many of the counties. The biggest change that it could affect probably is whether you're going to be a federal audit or not. The threshold for a federal audit moved from $500,000 to $750,000. That's your total federal awards. So some of the smaller counties that maybe one year you're federal and maybe you're not the next, and it kind of goes back and forth, you may not be federal, again, depending on what that threshold. It's not a huge jump in the threshold, but it can mean the difference between a federal audit and not having to have a federal audit. The other change, and this is probably a little bit more significant, is the type of programs. When we come in, we audit, we do a calculation to determine which programs need to be audited. It's partly based on a risk assessment and a dollar threshold. That dollar threshold now goes from $300,000 to $750,000. That could mean that we have to look at less major programs than we have had to in the past, which would mean, you know, I think one county, when I was out in the field, I looked at 8 major programs. That could mean 4 this time, which means less time on an audit, less findings. That's always good. And then the other change is in the percentage of coverage. This is also determining how many programs we have to do. We have to get a certain percentage of coverage of your total awards. That number went from 25% and 50%, depending on whether you're a low risk or a high risk audit, to now 20 or 40%. So that means we have to cover less dollar amount of that federal schedule than we used to. So overall, this could mean that we have to look at less than we used to. It could mean that you're not federal anymore. Determining low risk auditees. Most of the counties use the regulatory basis of accounting. Since it's not a GAAP prescribed, it automatically makes you a high risk. So most of you are already high risk. So that's not going to affect it too much. We talked about determining the major programs and how it affects it. That is something that we do when we come in. We do that analysis and we do the determination of what programs have to be audited, but we do that based on the federal guidelines that are given to us. The one thing that did change, and I mentioned this earlier, when we determine the major programs, we also take into consideration a risk-based approach, and that includes determining if that program has been audited in the past, also whether you had any findings concerning that program in the past. They've kind of tightened up that risk assessment so it leaves a little bit less to judgment, and it gives you a little more specific criteria for doing that risk assessment. These are just the things I just went over about what's considered in the risk assessment. This is probably going to be one of your most difficult tasks, as far as the language in this says that pass-through entities must evaluate each subrecipient's risk of noncompliance. This was not specific in or explicitly said in the prior guidelines. It was assumed. That means that when you're going to give someone a grant, part of your grant money, or award them part of your money, you have to also consider the risk factors. Has that unit been written up before for, mismanaging programs? Do they have proper controls in place? So the county now is required to do that type of risk assessment before awarding or subawarding to those units. That could be your cities and towns, anyone else that you pass through money to. I would say that if anytime a program's audited and there has been a subaward from that program, so if you get a major program and you've awarded another city or another local unit part of that grant money, we're going to look at this subrecipient stuff, which means that you need to have something documented that you've done these things. What or how you do that is how you're going to have to determine internally what the documentation, whether you create a checklist that goes along with that, whether it's just notes in the file, but you do have to show that you've done this. Another change was in the question costs. The language before talked about known fraud, and then it's a little bit different write-up, but what they added to the language now is likely. So now it's known or likely fraud. So if it was, and we've sometimes had those complaints that they thought something was missing or mismanaged or wasn't appropriate, and it's a good possibility, but maybe you can't prove it for sure. So the word likely it doesn't mean that we could prove that it actually occurred, but we believe that it occurred. So that's the biggest change. That could make it a question cost. That's something that you don't want to hear in a federal finding, is that you have question costs. That means that when that federal agency is notified that there are question costs, they could come back and say, you need to repay that money because you can't prove that you spent it properly, or you can't prove that it's not missing, or it means that you didn't provide enough documentation that that money was spent appropriately according to the grant requirements. Section 3 findings must now include a statement of cause, which was previously only required for Section 2 findings and suggested for Section 3 findings. I don't know how many of you know the difference between the Section 2 and Section 3 findings, but what those are is the Section 2 findings are federal findings that are written up based on problems with your financial accounting. Section 3 findings are findings that are directly related to the compliance requirements of a federal program. So the first part means we found problems, internal control issues with their financial accounting records, and the other one says we found problems in the operation of the actual federal program. So here what they're saying is, before we just stated we found problems, now we have to include some language that says why those problems occurred. Typically it's because there's weaknesses in the internal controls, you didn't establish controls, you didn't have proper oversight, the person who was doing it didn't know what they were doing. We're not gonna write it that way though, I promise. So there's some language changes, so even if you had a comment, same program before, and you still have that problem with the same program and it's audited now, the language may have been changed. So if you're looking at that and you wonder why we changed the language, part of it could be the new requirements. We also have to indicate if a finding is a repeat, and that's something that we didn't always have to do. A lot of times we do go in and we repeat the same federal finding because the situation has not been corrected. But now the new guidelines say that we have to say in that new finding that it's a repeat and it's a continuous problem. The summary schedule of prior audit findings, it's one of the schedules that's included in the federal section. Before we would only list the Section 3 findings. Now we also have to list the Section 2 findings. This is something that's handled through the data collection process. Before, the only thing that was included is the actual data collection and the reporting. Now they'll actually include the entire reporting packet, which includes the questions that are answered along with the data collection form, and that will be available online. So anyone who's actually looking at the data collection report will be able to see the reporting package as well. I don't think there's really too much of a change here. It just requires that the auditor and the auditee make sure that they fill out their respective parts of the reporting package and that they don't include any protected personal identification information. I don't know that we've ever had a problem with that, so there's really no big change. It's just more adding the language to the guidelines that specifically says that it's not to be, and it's making the auditor and us and the auditee, you, responsible for that information. So a lot of the changes that I mentioned in the CEFA and some of the reporting stuff, the findings and all of that, it is something that when we come into audit, we provide all of that information, we prepare it or we compile it. The third bullet point here, the corrective action plan, that is something that the county prepares. The template that, if you've been given a template in the past, we have a new template that basically hits all of the requirements. So you'll be given that whenever you have a federal finding and you're going to be asked to complete it, making sure that all of the required information is included on that corrective action. And that corrective action plan is basically your response to the findings on how you plan to correct the situation, how long it's going to take. So you need to indicate when you believe it will be completed. And then the summary schedule of prior findings, that's something we usually complete and then give it to you to review and approve, along with the CEFA and the regulatory notes. Those are all things that we usually compile and then we give it to you to approve. The data collection form, this information's filled out sometime during the audit once they are done completing the review or the audit of the federal schedule. The auditor goes in and answers the required questions, enters all your federal information, and then later, usually after we've exited and moved on, you'll get an email that says that they need for the auditee to go in and certify the data collection form. So that process really hasn't changed. The data collection form itself, I know they have revamped a lot of that, the clearinghouse, and I couldn't tell you exactly what it's going to look like or what the changes are in the process for doing that. The email will still come from the same place that it did before. So, and the one thing I would say about this, we have it a lot, and hopefully the auditors have told you, once they leave and they tell you that you'll get an email, if you don't get an email, make sure you're checking your junk mail or your spam mail, because a lot of times it does go there. If you don't get it, make sure you contact our office and let us know that you never got that, because it does have to be certified before it's considered complete. So the changes, Part 2 changes, this is something that we haven't ever really been too sticky about, but the additional award identification, it's not referring to the CFDA number. The CFDA number is your federal identification number. But if that award passes through to the state usually assigns it an award number. Sometimes the federal government even has an award number. It's usually either on your award letter or some of your correspondence, your reports maybe. It could even be on your distribution reports. There's plenty of places that it could be, but that's one of the things that have been added to the data collection form. So that's something that maybe in your audits previously they have not asked for, but it's nice to know these now, because you can start the process now of locating this information and getting it ready. I also believe the Gateway has a place for the award number in there. I know a lot of times it's not entered or completed, and it's not always been a problem because it wasn't a requirement, but you do need to provide that if there is an award number. Cluster information, that's something that we'll do during the process of compiling. The outstanding loan balance, again, this will probably never apply to counties. The name of the pass-through entity, making sure that you know, again, who the money is passing through. Usually for the counties, it's going to be the state, but if you get money from another county as a sub-grantee of one of their grants, or don't usually see them coming from the city to the county, but it could happen. You need to make sure that you include that pass-through entity name and the amounts passed through to subrecipients. You need to make sure that you know the total dollar amount of any of the federal grants that is passed through to another grant as a sub-grant. Part 3 changes, the opinion on the gap basis. That isn't going to change for you. You're still using the regulatory basis if that's what you're using. They also want to know whether it's a special purpose framework. This is a question they didn't ask before. And if it is a special purpose framework, they'll want to know the opinion on that. So that's not really going to be applicable. Part 3 changes. Again, as I mentioned before, there's going to be a question about repeating prior year findings, and then a reference to the prior year finding number. And then the auditee certification contains multiple items to certify. So on your end, the certification, when you go in to do that, may look a little bit different. It may include some additional questions. Just make sure that you complete all of them so that the process is properly completed. This is about the only thing I'm going to mention on the allowable costs and the cost principles. I just want to point out time and effort reporting, compensation for personal services. This section, the 200.430, you're going to find that in this packet. And that's one of the reasons that I wanted to include at least a PDF version so that you don't have to go online and find it yourself. But any of those code references where you see the Uniform Guidance General Reference Number, that's going to tell you it's in 200 section 430. If you want to see what the actual language is, this is where our findings come from. These are the guidelines that we write those comments on. So if you want to know what your requirements are for time and effort reporting, especially when you're talking about an employee that spends part of their time on a grant and is charging part of their time to the grant, if time and effort reporting is applicable to that grant, you need to know, because there are specific things that you have to show as far as how much time they're spending, which may require a separate time reporting. It could affect the way that they're doing the payroll in the system, or they may have to do something manually to comply with these. So making sure that you know what the requirements are for any of those grants is important. I made a few changes to the slides since it's been posted. I struck out states because I'm talking to counties, so it's not applicable. But what you see here in red, those are the changes to cash management. All non-federal entities must establish, and always pay attention to the language. When they say must, that means it's a requirement, not may, shall, any of those. But when it says must establish written procedures to implement the requirements of 2 CFR 200-305 to minimize the time lapsing between the transfer of funds and disbursement of funds. This really applies more to the advanced grants. There are some time requirements. If you're getting an advanced grant, how much time you have to spend that money out. It shouldn't be sitting in there. Most of the programs that we see this at is maybe like the CDBG programs. Most of your grants are going to be on a reimbursement basis, so you have to actually disperse the money before you even get it. But if you do get some advanced grants, this is the section that you want to make sure that you're complying with as far as cash management. Also, interest that you used to have to report, the dollar amount was $100 before, now it's $500. And anything over that amount has to be reported and submitted quarterly to the Health and Human Services. This is a different agency than it used to be sent to, so make sure you make those notations. The other thing before I move on to cash management, and I didn't get it on this slide, I will add it to the slide and repost this, and I think I talked to someone else about this. When I was talking about subawards and subrecipients, depending on the method that you're granting them the money, which generally is on a reimbursement basis, one of the new requirements is if they're submitting a claim to the county to get money back from a program, the new language says that you must pay them within 30 days of receiving the billing or their reimbursement claim. So keeping that in mind when you're granting that money out, that when they send in for reimbursement, you've got 30 days to pay them out, as long as they have provided all of the supporting documentation. Now, if you question the costs or they have not provided the documentation, then you don't have to adhere to that 30-day rule if it's under question. So if you have that issue, I would strongly suggest with the subawards that when those reimbursement claims come in or submitted to you, that they're date stamped somehow, that the date they were received. And if you have any problems with them, such as they lacked supporting documentation or it doesn't comply with the grant agreements, that you make some sort of notation on those as well. Indirect costs, and I mentioned this whole section's new, but I'm not going to go over it verbatim, but it basically is that 10% de minimis thing, and it talks about who can get it and who can't. And it really just comes down to if you've already have an indirect cost rate calculated, then that's not going to apply to you. But if you're a county that doesn't have one already and you're looking forward to it and the grant allows for indirect costs, then this may be something that you want to implement. So the requirements are there. They're also, all of the specific language again is in here before you do it, if you decide to. Equipment management, we do see quite a few findings on this when we pull grants that require, that are used to purchase equipment. And a lot of times it's because the only method they use is their capital assets, and their capital assets aren't up to date. But it's not necessarily required as far as this for them to be in your capital asset records, which they should, but that program should have an inventory of assets that are used, that were purchased with that program. And then if those assets are disposed of, you're supposed to, if they're not replaced with the same type of unit and you just outright sell it because it's old or you're not using it anymore, that money's supposed to be returned to the feds. So you need to make sure that you're tracking assets purchased with federal funding, whether you're doing that within your capital asset system, if that's a capability, or whether you're doing that as a separate set of inventory records. But those, for the grants, those need to be maintained. Also, physical inventories should be up to date. They need to be done periodically, according to the code, every 2 years. So they need to make sure that they're making sure that all those assets are still there, that they have not just disappeared. And that the biggest thing is documenting that, whether it's just a notation that we did a physical inventory on whatever date and it's initialed off on, whether there's an inventory form that you do, however you choose to do that documentation internally is up to each individual county. I think some of the rest of them are adequate maintenance. You need to take care of the equipment that's purchased. And then again, the last one talks about the disposition and communicating with the federal agencies to figure out whether you need to return money if you dispose of that asset. Subrecipient monitoring. Like I said before, this is something that we've found not just at the county level, but we write this up quite a bit when there are subawards, the monitoring of it. When you award that money out, the other unit, the local unit, may be operating the program, but if you were originally awarded that money, you're still responsible for making sure that that money is used properly. So and there should be a sub-award agreement with that unit. Within that agreement, it should say what the requirements are, whatever the reporting requirements are, when reimbursements should be submitted, what needs to be submitted with reimbursements. All of that should be part of that sub-award contract. And then you need to make sure that you're monitoring it. We've went in several times and there's an agreement and it says that they're to submit monthly reports or quarterly reports, and you ask for those reports and they'll say, well, we never make them do it. Well, then you're not monitoring that program. You don't know what they're spending that money with or what they're using that money for or whether they even spent the money. If you're not making sure that you're monitoring what they're sending you, that they're doing the proper reporting. So you do still have the obligation to ensure that that money's used properly. Procurement. I take a deep breath because this, this one's the one that you're not going to like. So for procurement, you can choose to continue with the previous standards for 1 year as long as it is documented in your procurement policy. Just a show of hands, how many counties have a procurement policy? How many counties know whether they have a procurement policy? Okay, there's a couple options here. You are supposed to have a procurement policy for at least this, but the county itself should have a procurement policy that talks about the processes for making purchases, different kinds of purchases, dollar thresholds for purchases, who's authorized to make purchases. Those types of things are all things that should be included in your procurement policy. It is now a requirement for the federal section that you have a procurement policy, and it's also specific about some of the things that need to be in that procurement policy. You do have, according to this, a year to implement a new policy that meets these standards if your policy says that you have a year, which means that this year, for 2016, you need to have a procurement policy that covers these standards. Within it, you must use their own documented procurement procedures, must meet the general procurement standards, must conduct all procurement transactions in a manner providing full and open competition, must use the micro purchase and small purchase methods, which are explained in this, only for procurements that meet the applicable criteria, must use one of the 3 methods when an acquisition exceeds the simplified acquisition threshold, which is also explained in here, which includes the sealed bid method, the competitive proposals or non-competitive proposals, must meet a cost or price analysis with every procurement in excess of the simplified acquisition threshold, including the any contract modifications. And just a side note there, we've had just this week probably a few concerned about contract modifications where a contract signed for a certain amount or a certain service, and then claims continue to come in that exceed that contract amount or possibly even aren't within those services that were contracted and there's not a new contract. So your procurement policy should also address contracts and regular purchases and how that's handled, you know, whether anything outside of a certain period, if it changes the scope, certain dollar amounts, what the procedures are for amending those contracts before those payments can be authorized. Must ensure that every purchase order or other contract includes applicable provisions of the code. So those are the things that you need to make sure that you hit in your procurement policy. Now, you could have a regular procurement policy for the county, and then you could have one that's specific for these federal guidelines. You could have one policy that divides out the different requirements. But when you develop that procurement policy, it needs to be in writing. So when they go in to do the federal audit, and if you can get a procurement policy that says you have the 1 year, they won't apply it for 15, but for 16 you have to have it. So that's something that you need to work on getting in place so that you don't see a finding on that. And procurement relates to just about I can't think of a federal award that it probably wouldn't apply to or couldn't apply to. Then the last slide, I just include a link to where you get this from, but we do have that posted on our site. I would say that it's fine to use the one that we provided for training materials, but going to the site always provides the most up-to-date information. So, you know, we've provided this, but a couple years down the road, I wouldn't always rely on what we provided you, because 2 years from now, they may have changed wording, they may have moved things around, they may have eliminated things. So make sure that you go to the actual official site and get the requirements. Also, if you ever have any questions during the audit, when they tell you that there's an issue with a compliance requirement, federal compliance requirement, and you want to learn more about it or you want to know what you're supposed to do, you know, ask for the guidance that it's under, and then you can find it in the manual so that you make sure that you know exactly what those requirements are, because that's what we base any of our findings on is this. So.